Good morning, everybody. It is January 18th, and I am broadcasting from my in-laws' place in Michigan on my laptop, so the screen may appear a little shorter than usual. It's a little different than my four-screen setup at home in South Dakota, but and it's a little different because we are in Eastern time instead of Central time, so that takes a little getting used to. But sorry I was not around yesterday. That was a travel day, but I will be here today and tomorrow, and I hope that this stream is going through well enough for you to see it and pay attention. If not, at least the trade ideas will be published and available on the site. So, and I'm sure the Forex Lens guys will let me know if this is coming through or not for you all to watch. But let's just kind of take a look real quick here at the, we got some big news events coming up, housing starts, and building permits, other things today. If we take a look at gold, now gold has been, we've been talking about a pretty bearish move on gold coming up because of that massive divergence, those massive overboughts, which we have. Now we broke below this angle, and that is very significant. We did not respond off of it. We did not find support. We broke through this angle, so it wants to test the next one, which is down here. And so the next angle we're going to test is the one straight below it. So that's a pretty steep move down. So we should anticipate some more move down. Now, what we should look for is a new impulse wave down with a small correction and then another impulse wave down. So right now, if after at 7:30 we're going to come back to look at this, but right now I am looking at being short at 1328, basically where price is right now. Whoops, not mean to. I'm going to say short at 1328.31. Okay, and I can put my stop anywhere above the angle for a tighter stop, because we should have a nice move down for that for us from where we're currently at. So actually, 13, a little bit above 1337.919. Oops. Those are good areas there. Of course, I should put in there we probably want to wait until after 7:30. So we'll want to observe what price does on the news release. Okay. Now let's look at the euro. The euro short has been working pretty nice. I thought that I got through yesterday. On Tuesday I said that I would get the trade ideas out, but I guess on the travel yesterday, none of my things got through the signal page, which is unfortunate. I had a short called yesterday, had a break below this trend line, and with a stop of the arc here. So unfortunately, I did not get that signal out, but I did put one out right away this morning before I actually started streaming that we have a short opportunity here, as long as we don't get any massive move to the upside, and we're going to wait a little while to look. And so we'll take a peek there. Notice how much price is responding to this arc as support and treating it as support. It has been tested 3 times, so we'll want to see how how we react here. You know, we are kind of at a point of near equilibrium because we're above the 45, but we're not in drastic overbought territory. So keep an eye on that. UJ has been a pretty nice little mover right now. You know, the long trade was down here. We had this inverse head and shoulders on UJ. So, but we're above this angle. So this angle should be treated as support. So even right now, this is good at buying area. So anywhere between really 111.2 and 111.05. We're going to put a stop at probably, yeah, we won't be below this, but maybe like at 110. That's a tough little area there. I mean, I feel like we should have a longer stop on this, but probably like 110.4. A little, probably larger stop than a lot of people would be comfortable with, but you know, gotta take your lungs. We're there. Again, we are probably want to do this after, a little bit after 7:30. Oh, sorry. Rather. Sorry, my computer's still showing Central Time when I know we're in Eastern Time. After 8:30, there we go. I'll stop messing up so much. Looking at the other trades, you know, the New Zealand dollar, you know, again, I have the moon phases listed here. So again, when we're at a new moon phase, and a new moon phase can mean a full moon or a new moon, but we are at a new moon phase, which means that we are generally at the market. If we're at market highs, swing highs or long-term or short-term swing highs, we can have a strong bias at that level for some movement to the downside. We have in the New Zealand dollar, similar move to the Aussie dollar, but in the New Zealand dollar US dollar pair, we have the Kiwi. We've tested this trend line a lot, and it has been respected quite a bit, but we are not currently making a higher high right now. We are approaching a bit of a head and shoulders position, possibly not a very tall head and neck area there, but we can get a shoulders pattern on this. So we really want to probably, I know this is one of the more fun setups I was looking at here. Get rid of this because we know that is gone. But, you know, we are in these really extended conditions still. We have a clear divergence. You know, we're getting higher highs but lower highs in our oscillator, so that's fairly bearish. We're coming to the end of a time cycle here in our Gann square, and we're getting rejection on this upper trend on the 8-hour, which that isn't really honest. I should forget what I just said about this rejection on this trend line on the 8-hour because that was drawn on the 1-hour chart. So we do have a pretty strong bias for a bearish move in the New Zealand dollar. You know, we have the risk-reward ratio on this one's pretty big in the reward area. So we could really go short right now and put a, well, there's a couple areas. I'm going to be aggressive, you can get in right now. But 0.7303. We could do another, it's 0.732. And we could go even higher, 2. We'll call it 734. Yeah. And we want to stop at 0.7385. All right, and then you know, wherever we're short here or above here, we should get a nice move down. And you know, and if you really want to wait for a short, we could wait till we break below the trend line, and that's going to be below the 7,300 area and probably 728 area. Right, so you know, if you want to get aggressive and get and wait for some here, or if you want to get conservative and wait for all that price action to move and let everybody else kind of duke it out and wait till there's a breakdown here, that is a trade opportunity as well. Let's go back and look quick at what gold is up to. Gold is still wanting to move down here, not a lot of responsive buying. The euro is kind of sitting flat a little bit. We got 930, natty gas, yeah, oil stuff. So I remember trading, I used to trade a lot of oil futures. I learned pretty quickly that I stayed out of those numbers trades. I did not, if there's one market where you don't want to trade the news, or be trading or have open positions during the news, that is the oil oil futures market. That is a you have to get yourself a nice account if you're trading individually. You can wipe it out pretty quick in one day. Learned that the hard way. Euro trade still, you know, based on the hourly. I want to take a look at the 8 hour on this real quick. If you can see, we have this kind of move down. Some folks may say that this is a bullish move. I would agree that we have a bullish flag pennant, and that may be right. However, we are on these really long extended moves, and it has not faced a lot of resistance. We're going to get some up here on this arc. So, you know, if we're going to follow like this Elliott wave that I put up here, if we have our first leg down 1, and then 2, we probably go back up here. Then 3, we should have a retest of the 45 or a little bit below and find support at this arc before we have our next impulse go up. So we want to be aware of that, looking at that. Again, those short ideas on these currencies, we really kind of want to hold a little bit and wait to see what's going to happen, you know, basically after 9 o'clock. That can give us kind of an idea of what's going on. Let's look at the 1 hour. We'll come back to these before I put out of here, but let's look at cryptos quick. Cryptocurrencies, oh boy, you know, we have had some nice moves. Why don't I look at a cleaner chart for that? This is a little bit more difficult to look at on the smaller screen. So let's take a little walk here. Or what happened on cryptos. Let's see, what day was that? Yeah, basically Sunday, and then Monday, Tuesday, Wednesday, we just had this massive sell-off in cryptos, in our majors, just huge. Now, I have been talking about a move in these pairs where we're going to get to a I'm trying to figure out where I did oh yeah, here we are. Okay, I want to show you this. If you've been with me at all, you know that I am not the biggest Elliott wave fanatic. So, however, I did do a little bit of drawing here to show that if this was our real first impulse wave before we had the sell-off in December, then what we are looking at is our first corrective wave, which is just the second move in a longer impulse, okay, in Bitcoin. So, realistically, we could still move down more, preferably, ideally, maybe to the 5,000, between the 8,000 and 5,000 zone. Actually, let me get that down a little bit. I know that sounds a little creepy, but if you're already sitting on the sidelines and you have, you're waiting, actually, let me adjust that a little bit. There we go. So, the 8,000 zone is a kind of a natural place for this to move down to, but it doesn't have to. This is perfectly fine for it to want to reverse here. I mean, really, we kind of did a little bit, but, if we have 1, 2, 3, 4, 5, and then we have our ABC or our 1, 2, and 3 move, maybe our 3 move ends here, then we know that we have this move here. That's our first impulse wave, and then we have our first corrective, and then our third. The third is generally going to be one of the longer moving legs. It should move a lot farther. But it can't be the, oh my gosh. There are so many rules with Elliott, and I think people follow them way too dogmatically. You can't go into the territory of one. It can't be the shortest. I don't really have not prescribed to those rules being laws. They are malleable and bendable. The structure is what's important. Obviously a 5 move should not look like a ABC a move that's going to look different. But I mean, you can use a little bit of common sense with this stuff. Don't make it so complicated. But really, our third leg should be pretty big, though. We should move fairly steadily or very violently to the top, to the 20,000 area, before we will have run a little resistance here on a longer step and burst even higher past 20,000. So just be on the lookout for that. This is very bullish. We get all this volume down, but look at this volume. Look at these volume bars. This is where price is going to reverse, is when you've had this muted volume. That volume that keeps decreasing as price is going in one direction is not a sign of strength of that move. It's easier to manipulate prices lower like that. It is easier to get frustrated as a trader because something's moving on low volume. You don't want to fight a low volume move. You just don't. You can be following technical analysis to the T and know that move is false, but just the market can remain irrational longer than you can remain solvent. So do not fight those moves. But when we start to see this, when we see these massive volume bars forming in a down move, when we've already been moving down, that is a very good sign that price is going to reverse. When we can see this all throughout the history of really any instrument, but on Bitcoin we see it because we have a down move, massive buying volume. We had a down move, massive buying volume. We had massive buying volume on the move up, and then what happens? It goes down. So volume precedes price. Right? We have buying volume that gets really high here, and then it comes down, and we come down, and we have support of buying volume again. So this is something you'll see in any instrument, currencies, futures, Forex, equities, whatever the market is. If it is volume, you'll see that. So when we have decreasing volume and then we have this massive spike and increase at these levels, that tells us that price has found a support zone. Could it be a fake out? Sure. Yeah, we can still go lower. Structure here says that we still have a lot of bias to the downside. But what's going to really flip my trigger here to know that we're going to reverse is if we can get today's volume to move price above the high of yesterday's candlestick. So a close, actually not even a close, just a move above 12,358.89. That would mean that we have a full pivot candlestick here, and we have a lot more supportive bias for the move to the top. And again, a supportive a pivot candlestick, let me get rid of this, means that this middle candlestick, this one right here, if the two candlesticks outside of it to the left and the right, if the lows are higher than the middle stick and the highs are higher than the middle candlestick, that means you've got a pivot in a candlestick, and that means that there's a strong it generally always means that price will reverse. You can see this rule applied a lot, even right here. You have our bearish, we have a hammer here, but then we have lower highs on both sides of it, and then lower lows on both sides of it. Same up here, and on this reversal, we don't really have that great of a signal. But when they do form like that, that is a sign of big things to come. So what we're really wanting to see for a nice reversal is, we really need to see this move up more, and we really want to break a 15,000. Okay. We may not see that. We may see some consolidation, because on the 31st of February, we have a new moon. We have the end of a time cycle. There's a whole lot of activity on the 31st. Not a new moon. We have a full moon on the 31st. New moon phase, which is a full moon, that happens on the 31st. We have the end of a time cycle here. We have a confluence of time, price, and momentum. I don't have a square up here. I don't even know if I had it on this chart. Let me look. Nope. But if you also notice why we can have a bias for some up momentum is that these swings in Bitcoin seem to happen in 30-day moves. All right, from swing low to swing high, we have a swing low to the end of a swing high here, and then another move. It's about 30 days, and then that big move here was 30 days. And if we're going to go 30 days, we can scroll back. I was just kind of plotting lines here from swings. We have a lot of movement in 30 days that we can account for changes in trend and momentum. So we have a good bias for further movement after 30 days being down. Actually, we can go to 31 days now. Oh. A little hard to do. If you hear all this sound, it's literally live in a log cabin in the woods in Michigan. My cell reception is horrible, but the internet isn't too bad. I hope it's not too bad. I hope this is coming through clearly. So yeah, that's the Bitcoin. Look at there. If we look at the other altcoins, you know, we have some supportive buying in this arc. But if we look at Ethereum's trade here, you know, we have supportive buying well below this. I mean, these were great buying areas. Oh my gosh, these were gifts, folks. This was early Christmas. Experienced and successful traders do not panic when they see moves like this. Especially in a market that does not have the ability to be shorted by everybody, then these kind of moves are literally presents. If you have positions where you bought up here and you're getting nervous, of course you are selling right where we want you to be selling to us. When you see moves like this in a market that has only upside potential, you should be very excited. You should be so excited and feel so bad about being excited because everyone around you in chat or everything you read is so bearish. You need to have that contrarian viewpoint because this is where you make money. This is where money's made on moves like this. You know, if we see Ethereum just move down, I've always been saying that anywhere, you know, buying anything below 1,000. Actually, I'm going to change that. Below 1,200 is a good buy now. Litecoin, I think Litecoin is the dark horse here. I think Litecoin is going to absolutely blow up to the top side. I mean, this guy has fantastic. It is a good coin. It is a good currency. It is a good coin. You know, Litecoin's blockchain performs the most transactions out of all the other coins. So, you know, just be aware of that. So we have a lot of upside momentum here. If we're seeing the similar structure in these coins, you know, that's totally normal. We're seeing the same kind of candlestick formations. So, you know, we have a lot of potential for big moves coming up here in these. But we also have strong potential for further down movement. We may just be in a small correction before we move down farther. But you know, there's a lot of bias for some increased momentum to the upside here. So let's go back, look at our Forex pairs real quick. Let's look at so we have gold making a little bit of a, maybe wants to change its mind a little bit. Euro, same kind of thing here. You know, we still want to wait a little bit here to see what happens. The dollar yen, same thing. New Zealand dollar, you know, hopefully it keeps going up. It'd be nice to get back in a short there. So yeah, I mean, we definitely have some opportunity for entries on these. If you got short here and you're worried about it, or if you didn't get short yet and you're waiting, I wonder if I did update that. Oh, I wanted to put that other one in there, but we can wait till we get back to if we have a short trend line here. We think we're actually broke it or we're near term breaking it. This is so difficult on this small laptop. Yeah, so we are. Yeah, if we look at that, we did get rejection on that trend line. We'll see if it wants to break. I thought I had that on here this morning, but I guess not. we'll see if there's a break above this, because when we're sitting at areas like this where we are really over. Let's look at our oscillators. We are in overbought territory in the composite index. So this is the leading. Like if you want to see which oscillator here is going to give you the best idea of what's going on, it's the composite index. The composite index is going to show you the move before the RSI. The RSI is more of a confirmation if we want another, something to complement this guy down here, because this is the more advanced, more sensitive, and more honest indicator over the RSI, the composite index. So we are in these elevated territories in the composite index. We are above 50 in the RSI, and we have this hidden bearish divergence where we have higher highs in our oscillator, but we have lower highs in price. All right, so that is our hidden bearish divergence, which means that we have high probabilities that move is going to go down. So watch for a fake out move here. Also, I wouldn't be surprised if we got, let me just kind of get out of that. See, here, put our Bollingers on here. Where are we at? Bollingers, we're not really in much of anything, but we are approaching the top of it right here. So, yeah, we've got good short opportunity in the euro-dollar pair here. What's that looking like on our? Yep, our gold, similar formation there. Does not look like a very convincing move yet. I mean, these pairs, though, they have been shooting up pretty drastically, so this could just be a bit of distribution and accumulation before another massive move to the top. We'll see. Again, if this was a 5-step move and then we have our 1, 2, 3 or ABC, then we're just ready for another impulse wave. But we just want to observe that we are at these current overbought conditions, and that probabilities for the short term here are favoring down movement. But if we do break and hold this trend line, and we get back into the 2300 area, we're looking not at buying after. We only want to buy when we get past this resistance arc. So that is the trades for today, folks. I hope that you were able to see this clearly, or at least you'll get the trade ideas on the portal. I'll be with you guys tomorrow, and I promise that on Monday, when I'm back at my home and office in South Dakota, that I will be in a much clearer screen. I will be dressed up nicely again, and hopefully be able to see and hear me clear. But as always, trade safe, trade smart. Don't trade scared or over happy. Use what I'm telling you to complement your own trading style. And yeah, we will see you all tomorrow morning.